Good morning, welcome to this update on Thursday the 30th of June from Phoenix Blue. I'm Tom Colley and I'll be talking you through the markets this morning. Well, yesterday we saw a recovery in equities. We saw that quite strongly in the US on the S&P. I'll show you that chart shortly. Unfortunately, we had a losing trade based on that. We've also seen a recovery in the FTSE 100 back to pre-Brexit levels. However, it's worth pointing out that the FTSE 100 is dominated by companies that earn the majority of their revenue overseas in foreign currencies. When it comes to converting this back to sterling, they will be benefiting from a lower value of sterling, inevitably or potentially increasing the profitability in sterling. If we look at the FTSE 250, which is more of a UK-based companies, we'll find that is still below pre-Brexit levels, but has seen some recovery since Friday last week. Before we look at the charts, over to the news. Yesterday we saw reducing crude oil inventories again. Crude's quite stable this week. Could be another reason why equities have been able to rise in value with that as one of the reasons. We're going to see some data out of the UK, current account and final gross domestic product. I would suggest that they are of a lower significance than usual, unless they're seen to be significantly worse than expected, in which case that might be an exaggerated result based on the Brexit scenario, means that the market is very wary, and if things pre that result were moving in a negative direction, I think it's going to enhance that opinion. This afternoon we've got gross domestic product from Canada and unemployment claims from the US. 4 o'clock we have Mark Carney, the Bank of England governor, speaking. That will be interesting. I'm sure his objective is to reassure and calm the markets. He's already talked about a £250 billion fund to support the pound in terms of QE and intervention if necessary. We seem to have a steadying of the markets over the last couple of days. Hopefully, well, his intention will be to maintain that or even improve that further. Hopefully he won't say something from his perspective that the markets don't like. Then at 6:30 we have the FOMC member Bullard speaking, again of interest because this is one of the first speeches post-Brexit out of the US. The President Obama said overnight that he was concerned that the Brexit scenario would reduce growth on a worldwide basis in the short to medium term. So we'll look to see how the FOMC support or otherwise that. Also of interest, overnight we have the Chinese manufacturing data. This top one is the government collected data. This is the second one is Cakesim, which is a private organisation which connects the data and tends to be the one which is more trusted. We've consistently for over a year now, more like 18 months, had these figures below the figure of 50. Anything below 50 means contraction in manufacturing. Anything above 50, expansion. So that will be a figure that we will be taking account of. If we go over to the Shanghai Composite, which is a composite of the Chinese equities, we'll see that we tip the top of this range here at 29.40. We then pulled away from that to a slightly bearish close, but again nothing significant there. We know this is somewhat of a managed market, so we're cautious to interpret too much from that. But you can see for the last couple of months we've been very much range bound in that respect. Over on the Nikkei, we had the big down movement on the Brexit announcement. We've subsequently had several days of a bullish move, but the overnight session has been bearish and we've got an engulfing body there. Over in Japan, similarly, following a big strengthening of the yen, and what we believe to be Bank of Japan intervention. We've had some release of pressure there with a weakening of the yen, but so far overnight and into the session today, we're looking to an increase in yen strength there. That will potentially relate to what we've seen over the last couple of days on the US dollar. This is the US dollar index. After strength through Brexit, we've seen a pullback. Is it a pullback? Are we going to see a test of 94.50 here, or even a test down here around 93.50? Our view remains bullish this market, simply because it is the strongest economy worldwide. It is the strongest of a lot of weak economies, it has to be said, and it remains to see how this plays out, because the option for the Fed raising interest rates appears to be off the table, at least till the end of the year, based on the expectation of reduced growth and reducing inflation based on the Brexit announcement. This is the S&P. We took a trade yesterday at 2040. Good level. Nothing wrong with the trade, but very, very clearly the market had other ideas yesterday and blew straight through our stop. But as I said, the trade was valid. It just happened to be that was one of our losing trades. We'll now be looking for a break of the high or a break of the low potentially before we have any significant bias on this market aside from news events. Over on commodities, silver's at a nice level at the moment. We redrew this chart yesterday. We had a very strong day, and so far today we've got another bullish day up to this level within a rising wedge here. If we get a break out of that wedge on the long side, bearing in mind we expect a breakout from a rising wedge to be from the downside, and then a retest of the wedge at the top of the wedge and that level there, we will be looking at long side trades on silver. As I mentioned yesterday, silver is seasonally bullish for July. It's also seasonally stronger than gold through that period, so would be a nice option to take in the short term. However, silver, like gold, is still at our COT extreme signal, which means it's indicating a potential top in the market. But as I've said a number of times, if that signal is ignored, which would a break and retest of that would be an ignore of that, ignoring that signal, we can in the short to medium term change our bias until we come to another significant level. Corn, something we've been trading significantly recently. Our first entry through there, you can see on the green line. We scaled in at around this level yesterday. The day before yesterday. We had a really nice move away from that level, which is, for all intents and purposes, about 3.9595, I think, was around that level in conjunction with the trend line. Beautiful bearish continuation bar yesterday, but then a very much inside open gap to the open today. This will be unusual to traders who don't normally look at commodities. We would normally only see this scenario on the back of significant news events or significant news events, or even over a weekend, in order to see that type of move. In commodities, it's not quite as unusual. It's more driven by the influence of the commercials, who are the buyers and sellers in this market, who aren't speculating. They are looking to sell, distribute, source the hard product itself, in this instance corn. A couple of other commodities we're keeping our eye on. Both of these have commitments of traders, extreme signals as being at a high point. We're looking for trades to the short side. In either, we can see both of these are in rising wedges. If we see price action from these significant levels here, we'll look for trades within before on the short side before we hit the bottom of the wedge, at least being at 1-to-1, so we can get half the money off the table, a stop at break even, and no risk trade. We're looking for a break to the downside from a rising wedge, but we don't know when that will happen. We can make some money, we can have a free trade sitting there for when it happens, from a price action trade at that level. If we don't get that price action trade, we'll still be watching the bottom of the rising wedge for a break, say down below this level, and a retest to take the market short from there. So both those are showing commitment of traders signals. We're looking for the rising wedge levels and price action to confirm the next movement. Okay, guys, that's all there is really to talk about for today. If you like what you see and you're new to Phoenix Blue, why not come along to 4 hours of free trading in London on July the 19th. Trade alongside one of our experienced traders for 4 hours. If we have trading opportunities, we will actually trade them there and then. We'll also have the opportunity to ask questions of the traders. There'll also be other Phoenix Blue traders around and clients who you'll have the opportunity to speak to about their experiences of Phoenix Blue. All you need to do if you want to come along to this event is just pop onto the Phoenix Blue website, fill in the forms in the events section to register. Then we'll then send you a confirmation email with all the details. If you've got any questions ahead of this or any questions whatsoever, email us at info@phoenixblue.co.uk, or questions about this particular video, I'm at tom@phoenixblue.co.uk. Okay, guys, trade carefully. Let the markets come to you. We'll speak to you tomorrow.